Yeah. What up? What up? What's up, everybody? It's Big Chad. It's time for another video of trading quotes. You see that up here on the screen. It's my third book. I'm making the entire book free for you in the trading quotes playlist here on my YouTube at Chad's Trading. Go ahead and check that out. Trading quotes playlist. We're going to do the quarterly wrap-up. So the way the book works is there is one quote a day, 365 days a year, and then every 3 months I take out my favorite quotes, and there's a selection of favorite quotes. So this is the third quarter of the year. So you see I've already done all the rest of the book. Look at this. I'm going to have the entire book for free. So now we're going to do basically favorite quotes from weeks 27 through week 39. All right, and that's what this is going to be. And I am, of course, on Twitter at Big Chads. And you can find me on Bitcoin Live, where I am a proud founding analyst. So, without further ado, let's jump right into it. And I have favorite quotes, part 3, right up here, ready to go. So, gentle reminder that bottoms are slow to form. And they will often give you multiple bites at the apple. And that's the idea that, most of the time you're going to get a lot of different chances. You're going to get the trend is going to slow down. It's going to try to break out. It's going to come back. There'll be some fake outs. And, we have to get rid of this mentality where we're afraid to miss the bottom. And I talked about this in a live stream today. We're afraid to miss the bottom. But the idea is you actually want to ride the trend. You want to ride. You're going to get the majority of the move, rather than just jumping in at every first little bounce. Bottoms take time to form. There's volatility events. There's these fake outs. And what those do is they shake out those inexperienced and overly eager spectators, the ones who don't wait for confirmation. So instead of jumping in early, wait for stronger confirmation that things have turned around before applying your risk. Because that's what you're doing, is you're risking your hard-earned money. And so before you apply your risk, you want to make sure that it's a genuine turnaround. All right. And this bottom forming process gives you multiple bites at the apple, multiple chances to take a position. So there's no reason to force the action. Wait for the price to show you that momentum is turning around, and then take a little bite, scale in and scale out. Now, if selling were as easy as buying, we would all be retired by now. It's so easy to buy, right? It's so easy to hit that button to open up a new position because you have dreams of your future profit. You have dreams that it's going to work out and this is going to be a 10-bagger or a 20-bagger, and we see what could happen. We know what the potential for a move is. So you would just every time you enter a trade, you think this one's the winner, right? But these ideas will often fail. And it's important to admit that you got it wrong, and that's the hard part. Nobody wants to say you got it wrong, but when you make this admission, there's a loss of capital, and that can be devastating to your confidence. But you have to understand that all the best traders take losses. Some of them only win, 30% of their trades, 1 out of 4 maybe, right? So you have to accept that taking losses is inevitable, and you have to find a way to be good at selling as well. Be good at taking your losses, and also being good at paying yourself for a good idea. When it works out, taking a little bit of profit, scaling in and scaling out, and understand that you're going to be wrong, and embrace the ability to realize when you're wrong, right? The best traders are quick to realize when they are wrong, okay? That's the first step towards protecting your remaining capital, okay? Now, if you spend time obsessing over old losses, you have a high probability of generating new losses. Oh, I love this quote. I love all these quotes, right? And these are all my original quotes, all 365, if you can believe it or not. You have a bad trade, it owns you, and you obsess about it, and you're not even in the position anymore. And you just think about it all the time, and it haunts you. And it's just, again, that will eat away at your confidence. You must trade with confidence. If you don't have confidence, you really have nothing in trading. So rather than obsessing, right, over that failed trade, you should analyze your mistakes. Use that trading journal. Look at the mindfulness section. How were you feeling when you entered the trade? Were you too eager? Were you too excited? How are you feeling when you exited the trade? Did you follow your plan? So don't dwell on these trades. You have to understand that every trade is an opportunity to learn. It's an opportunity to improve. If you think you're destined for failure, if you you had a bad loss and now you think, well, all my trades are going to be like that, it's just not going to work out, right? You need to absorb the lesson, learn what you can, and move on without letting it plague you. Rather than obsessing over these old losses, spend your time studying technical analysis to help you manage your risk, and use your trading journal to help you avoid new losses. I just said it earlier. The best traders are quick to realize when they are wrong. And again, thematically, the stop loss is when your trading idea fails. I say most profitable traders win less than half of their trades, probably way less. Didn't mean to do that. It's probably way less than half of your trades. And they're still successful because they let their winners ride and they have smaller losses. So the winners more than make up for those small losses. Keep your losses small, let your winners grow. And understand that when your trading idea is invalidated, you have to accept that fact as quickly as possible. Don't double down. Don't just hold and I'll add at the next level and I'll just make my average better. Nope, you're fighting the trend. Your idea failed. Just move on. Your bankroll will thank you. If you manage your risk, your bankroll will thank you for that. The stubbornness and the denial, these are not good traits to foster or to have if you want to survive as a trader. So, the sooner you recognize that failure, the better off you're going to be in the long run. Okay. Now, a lot of these are tied together because the best part about being wrong, it's the opportunity to learn something, right? The residue, if you will, of any failed trade is a lesson yet to be learned. And you can think about, did I have the right position size? You can think about, did I rush into this? And, did I ignore signs? And so it's inevitable that you're going to lose money and it's part of the game, but you have to lick your wounds. You have to take time to lick your wounds, recover, and maybe you're too emotionally involved, and that's your lesson. That you have to take more time in between losses. You have to find a way to manage yourself. The value that's left over is the behaviors, whether it be your emotions, whether it be your actual technique that led you into that failed trade and that capital loss, the loss of money. Don't ignore the lessons. Look at them closely. There's real value in them, and figure out why the trade failed and use that knowledge for the next opportunity, because there will be another opportunity. There will be another trade for you to take, and let that loss be your teacher. Let it guide you and be a good student. Okay. I love this quote too. Treat your money right or it will find a new owner. Well, you own your money right now. That is until you spend it. But if you it's one of those things, like say you have, you win a big trade and you have all sorts of, funds from that. Then you immediately start doing risky trades because you say, oh, I can afford to lose this money. Well, you're not respecting your money, right? Careful bankroll management, it's centered around avoiding that unnecessary risk. And these capital preservation rules that we have, about, a certain amount of money in each play and sticking to your stop loss and taking profit. These are the things that help you survive. And when you disregard those rules, that creates an opportunity for another trader. I mean, it is PvP, let's be honest. And so somebody who's more patient, more disciplined, they're going to make quick work of your loose and careless actions. Like I said, thinking you can afford to lose money, very careless. Some people buy without looking at the chart. Isn't that shocking? It is shocking to me that somebody would buy without looking at the chart. Are you buying at resistance? Are you buying just a terrible looking downtrend? or also, again, trading when you're angry. These are really foolish things to do. You need to treat your money right, or another trader will gain management over your funds. This is a big one. I would rather be late to the party than show up at the wrong one, right? I talked about it earlier. I talked about it in my stream today. Your whole goal as a trader is to identify a trend and then to ride that trend. So rather than guessing the bottom, wait for confirmation to make your life easier, right? We really want to anticipate every top and bottom of the move. It's in our nature. It's fun. We can get clout. Look at me, I nailed it. But this is a bad habit, and it chips away at your bankroll. Instead of aiming for perfection, which is pretty much impossible, wait for the trend to define itself for you. And once it's been established, you can ride that trend and make some profit. Trade with the trend, go with the flow. And if you do that, it's just going to work out so much better for you, right? How good is it to know that you're at the right party? You've picked the right trend, because the penalty for showing up at the wrong one is bankroll destruction. Protect your capital. Become allergic to holding losing trades. Get into a situation where your skin crawls, you start to itch, you get a rash when you think about holding on to a trading idea that's failed. It is just absolutely critical to learn to be uncomfortable holding on to losing trades, especially for an extended period of time. You want to be anxious and annoyed with yourself for doing that, and it triggers that allergic reaction. So retrain your mind so that your skin starts to crawl at even the idea of holding on to a failed trading idea. This is really going to help you stick around and survive long enough to thrive as a trader. Now, listen, you really want to make sure that you're looking at a clear picture, right? I have other quotes that say, the best trading opportunities will jump up and hit you in the face. It's essentially like that. If you don't have a clear feel for what is going on, just stay on the sidelines. Just wait, because the chop will chew you up. Choppy range. This is about avoiding trading in the middle of the channel. You have to understand, after large price moves, large impulses, the price will stop. It will consolidate in a choppy range. Could be a bear flag, could be ascending triangle, descending triangle, could be anything. And it's difficult to trade in these choppy ranges. Breaks a level only to lose it a little while later, and it stops out traders on both sides. And when you're in this type of environment, just do nothing. Just sit back and wait, and understand that the best trades come from trending markets. And these are opportunities so obvious that they jump up and hit you in the face, as I said earlier. So stay on the sidelines, avoid the chop, and just wait for these obvious setups, ones that are so obvious they grab your attention. All right? If you don't have a good feel, stay on the sidelines. You, like becoming allergic, you need to cut the trade as soon as you realize you made a mistake. You need to destroy these errors before they grow and destroy your bankroll. And that's the thing. You're protecting your bankroll. Your bankroll is a living thing, in the sense that you can feed it. You can have these actions that will hurt the health of it. If your trading idea fails, just get out. As soon as it's invalidated, you need to get out. And that's just imperative to your ability to survive as a trader. And you can't thrive until you're surviving. You got to start out by surviving. And if you go past that point of return, where you fail to exit the trade, now you're managing a losing trading idea. It owns you. You think about it while you're sleeping. It's hurting your confidence, and you're choosing to fight the trend. You're not going to win. You will not win by fighting the trend and fighting the market. And these small losses, they have this just uncanny way of growing into big losses. Why? Trends tend to continue. Keep that in mind. Understand that, humble yourself, and you must destroy these errors before they grow and destroy your bankroll. Now, I'm a chart guy, as you know. I'm a technical analyst, and I pride myself on that. And I gotta say that sentiment, I think, is even more valuable, more accurate than TA. And there's something about it. So as a chart guy, it just pains me to say that bottoms and tops, they can best be measured in sentiment rather than technicals. And you really do see, especially with Bitcoin, which many of you are trading, you see historically just massive overextensions of sentiment, on one side or another. And, it can be deadly accurate, and you can use it to help you with your TA. It will help you spot the top and bottom of larger moves, even smaller moves, with these social cues, right? At the bottom, people are giving up because, it's over. It's never going to recover. And at the top of the range, enthusiasm is off the charts. You're making fun of bears. It's going to $1 million. If you can find a way to step out of that yourself and observe it, you're going to get a lot of information from the ebb and flow of that sentiment cycle, if you will. And you'll just have a much easier time spotting when the trend is about to reverse and is reversing. So I would say pay close attention to what what the market participants are saying. They are the living, breathing reflection of the market, and use that to help you sharpen your focus as a trader and a chart technician. Sentiment can be a deadly accurate tool. You got to be careful out there, especially as a newer trader. Who do I follow? Oh, this guy seems like they know what they're doing, right? You got to understand, most of the people on social media, they have no idea what they're doing. They're just saying things. They're trying to feed their crowd. They're giving people what they want. They're throwing red meat, at the crowd. But most of them have never read textbooks. They've never studied professional technical analysis. So you might as well rely on yourself, empower yourself. If you empower yourself, then you can take credit for your wins and your losses. And, laying your hopes on someone else is just incredibly risky. You don't know if you just followed them and they've been in a good streak, and then, all of a sudden their bad habits catch up with them and you have to suffer with that, right? Master trader, they go on a bad run, you have to ride it with them. You should just assume that these gurus, these big KOL accounts, they have no idea what they're doing. They're just boredom trading. They're trading for ref links. They're doing whatever they can do. They don't care. But if you can make your own methodology by studying hard, putting in the work, then you can hold yourself accountable rather than, holding someone else accountable. And then you blame them if it fails. Instead of blaming yourself, you have to rely upon yourself. Grab a textbook. Start a trading journal and learn on how to rely on your own efforts. And the last quote from the quarterly wrap-up: if you're watching more chats than charts, your system is broken. It's very easy to just hang around in a chat room waiting for somebody to tell me what to trade. Just tell me where to put my money. Shut up and take my money. We've seen the meme. When you're relying on the words of strangers, you're just flying blind, and you're doing it willingly. You're choosing to fly blind. That's insane to me. And this person, they may or may not have picked something good for you to risk your hard-earned money. It's your hard-earned money. Respect it. Your trades must come from your watch list, a well-curated watch list, one that you have muscle memory on the plays, and you have a comfortable level of familiarity with those plays. And when you have experience with a chart, things just seem to work out a lot better, more often than not. So focus on the charts and leave the chats for those who want to gamble their money away. If you're watching more chats than charts, your system is broken. So this is from the quarterly wrap-up. This is the third quarter wrap-up, where I take basically my favorite quotes from July, August, September. And you can see here's like the, I've already done week 39, right? So every week, there's a quote for every day, 365. I love this book. I love this project. And the whole thing's free in the Trading Quotes playlist. That's where this is now as soon as I upload this video. Check me out on Twitter @BigCheds and Bitcoin Live, where I'm a proud founding analyst. Check out the Trading Encyclopedia, folks. I made it just for you. You'll love it. And but this is Trading Quotes, my third book. The whole thing's free. I'm very thankful for you to be here. We're going to dance again, and then I will talk to you soon. So let's do this.